I want to take some time to discuss an overlooked estate planning tool for high net worth individuals called premium financing and why premium financing should be considered in creating an efficient plan. Premium financing is a way to use leverage to your advantage when purchasing a large face amount life insurance policy for high net worth individuals. When I say high net worth individuals, I mean individuals with a net worth of 10 million or higher typically. Rather than using current cash flow from a business or liquidating appreciated investments creating a taxable event, one could borrow from a bank using leverage at a low interest rate to pay for life insurance premiums. This strategy is often the most efficient and cost-effective way to pay for life insurance. Also, borrowing at a low interest rate to pay for life insurance premiums with a cash value linked to an index that could grow that cash value at a higher rate could create what's called an arbitrage. This would also increase the death benefit, thus increasing the size of the estate. Here are just a few of the differences between traditional insurance versus premium financing for estate planning purposes. In the case of traditional insurance, most agents, brokers, CPAs, estate planning attorneys buy as much insurance as possible for the lowest cost and cash value to recreate basically term insurance. Coverage in many of these cases runs out. They use what I call the wait and see approach. If the client outlives the wait and see approach, they are either stuck with an exorbitant annual term renewal rates with no cash value return. Also, the commissions paid to the broker agent are too high and the client pays for that with large fees. Typically, there is no cash value in the policy for the first several years, if at all, and it can create an emergency coverage situation. In this case, the client is looking for the lowest cost possible. He or she doesn't really want to pay into the policy. On the other hand, when using premium financing for estate planning purposes, you want to pay into the policy or overfund the policy. The loan from the bank, in this case, is used to pay the premiums. In this way, we also avoid creating a modified endowment, or MEC, which could have an adverse effect on taking loans against the cash value in the policy if needed. Premium financing actually lowers commissions or fees, and some portions of the premiums have no cost at all. The commission paid is usually 60 to 70% less than traditional insurance. About 84 to 98% of the premium goes to the cash value in the policy from day one on average. So less exposure means lower cost of insurance per thousand. Loans for the purpose of premium financing should never have a personal guarantee. Instead, an ILIT or irrevocable life insurance trust or LLC borrows the money. You also have an additional purchase benefit or APB to age 120 as additional coverage, which is non-commissionable in some cases. Premium financing removes life insurance from the commodities market because it is a solution, not a product. The CPA Journal had an article back in 2009 titled Premium Financing, The Time is Now, which discusses using premium financing for estate planning purposes for high net worth individuals. The journal said, and I quote, "Once the decision to purchase life insurance has been made, financing premiums saves money." Our case design team recently worked with a client who, after years of building a successful business, was piecing her estate planning strategy together bit by bit, as we do when we are busy, and found that she had accumulated 5 life insurance policies. She wanted to be certain that her estate would be preserved upon her death and her family would be cared for. But it had become an unruly piecemeal of about $75,000 annually in premiums, all due at different times and with different companies. As a result, she had just decided to allow her premiums to be paid by automatic premium loans and was just putting off dealing with her estate plan entirely. By combining the policies into one premium financing case, we were able to make this a less stressful part of her legacy planning. Her total out-of-pocket expense was reduced by 75%. She was much happier posting collateral that will be returned to her and keeping her money in her business ventures. Plus, she secured an additional $8 million of death benefit to ensure that her future business growth will not result in another piecemeal approach to her estate she's already covered. Our case design team also had a client who had done everything right when he set up his personal estate plan in his early 50s. All permanent coverage with plenty of room for his net worth to grow and still have adequate coverage. At 71, his program was still working just the way it was designed, and his personal financial legacy was all set. However, he had one regret. In his early 50s, when he set up the program, he had been so concerned with his family life that he hadn't given a thought to charity yet. Now 20 years had passed, and he wished he had included his alma mater in his estate plan. We left the existing program intact and used one of the life insurance policies as collateral on a new premium financing program to provide a gift for the university. This allowed him to fulfill his charitable giving aims without having to redo a whole program. His only out-of-pocket expense was minimal interest payments on the loan. Premium financing, when utilized for qualified clients, not only saves cash flow, but also increases internal rates of returns. In today's low interest rate environment, coupled with new options for policy design and risk management, lenders with significant experience in premium financing make this an ideal time to consider this straightforward strategy. It's very important that this structure be designed properly by an experienced team that specializes in premium financing. If you're a high net worth individual, an estate planning attorney, or a CPA with high net worth clients, Chamberlin Financial has a case design team that specializes in premium financing here to help you.